Today, during the European session, trading activity was very low, like yesterday. That's why the market is almost stagnant. However, currencies are unlikely to repeat yesterday's scenario and jump at the opening of the US rate. The fact is that yesterday the currencies showed a considerable increase imitator from the eurozone. Today the macroeconomic calendar is empty, thus investors have nothing to rely on. Under the current conditions, traders will take into account only technical factors that will shape the currency market dynamic. Just one event may noticeably alter the market situation. It's a response from Russia on the oil price cap. However, the country will hardly announce any responsive measures today. It's likely to do this closer to the end of this week. Nevertheless, the factor should also be taken into account as it may cause a slump in the European currencies. What's more, investors remain cautious, waiting for hints about further auctions of the European Central Bank. It's still unclear whether the ECB will raise the benchmark rate by 75 basis points for the third time in a row, or it will choose a more moderate approach by raising interest rates by 50 basis points. Notably, the ECB still intends to slacken inflation, which now is 5 times higher than its target level. The regulator will hold a meeting on December 15. A recent report on consumer price growth in the eurozone unveiled that in November inflation slowed down to 10% on a yearly basis. Meanwhile, the core indicator remained unchanged at 5%. However, traders were encouraged by the partial withdrawal of the coronavirus restrictions in China. The fact is that such a measure boosted demand for risk assets. What's more, the US dollar slightly dropped amid speculations that the Fed will raise the key interest rate by just 50 basis points. Against this backdrop, the euro showed a rise. However, in the chart we see that the euro declined against the US dollar after it approached the level of 1.06. As a result, the euro lost more than 100 pips. Notably, this movement could be explained by a high overbought level. Under the existing conditions, the price settlement below 1.05 may lead to a full-scale correction, and in this case the pair may slide at least to 1.03. The upward scenario will become possible if the price climbs above 1.05. However, technical signal of a stronger bullish sentiment will appear only if the price consolidates above 1.06 on the 4-hour chart. Meanwhile, the pound-dollar pair failed to consolidate above 1.23. As a result, the pair started falling and returned to the support level of 1.2150. Notably, yesterday, during the US trade, the greenback was gaining in value against all other currencies. The price settlement below 1.2150 on the 4-hour chart will confirm the correction phase. In the event of this, the volume of long positions will increase, thus pushing the price to 1.20. The alternative scenario will become possible if the pound-dollar pair rebounds from the level of 1.2150, as it usually happens. And that's all for now. We keep monitoring the financial market situation. Subscribe to our channel and see you in several hours. We will take a close look at the US trading session.